Good morning, everyone. Happy Friday. Hope you've all had a great week so far. Just wanted to give you an update. So, we've had the UK PMI data released around half an hour ago. The numbers came in more favorably than expected, which suggests that there may not be as much pressure building in the UK economy as previously thought. This is a really good thing because it now means that the chance of the MPC cutting rates at the back end of the month or next week is considerably less, probably around 40 or 50% chance now only. If you remember from a video I did earlier in the week, the market had priced in probably around a 70-75% chance that the MPC would cut rates. That was off the back of really bad retail sales 5 months in a row, missing estimates that were released last week. However, then in the middle of the week, we had some favourable UK labour data. The employment numbers beat estimates, which was a good thing that lowered the expectations of a rate cut, probably down to about only 60%. And then, as I said, today's PMI data has come in favourably, and that's probably lowered it again to around 40 or 50%. A bit of a mixed reaction on the markets at the moment. So the pound versus the euro is holding up pretty well. However, the euro versus the dollar is not doing so well, and the pound versus the dollar is not doing so well. Probably sort of headwinds from the coronavirus might be affecting that as well. We're probably seeing quite a lot of flows into safe havens again because we don't know how bad this coronavirus that's spread from China could affect other countries and other markets. So as I said, there's probably quite a few flows going into those safe havens, which is why we're seeing the pound dollar suffer a little bit more and the euro dollar suffer a little bit more. I will just show you a quick look at how the charts are this morning as an initial reaction. Let's just have a quick look at how these markets are reacting. As you can see, the pound euro holding up pretty well. We've had a nice sort of 4-day rally, breaking out of the wedge that we had previously identified. As long as we stay above this wedge now, we're optimistic that the strength of the pound continues. We may see a sort of a pullback before we head higher, which is a natural thing, to see some profit taking and the market take maybe a sideways consolidation before building more momentum to the upside. In terms of the pound versus the dollar, we've seen a slightly worse reaction, but this could be due to other headwinds, the coronavirus being one of those. Obviously, the US dollar is a safe haven, so we might be seeing flows into the US dollar. We are still above the wedge that we identified, which means that things are still positive. We're still above the 130 level, which is quite key, and obviously we're still above our macro channel. So all in all, the pound's still holding up pretty well against the US dollar. The euro dollar broke out yesterday actually to the downside, out of a upward channel that we had, broke down below sort of 110.70 support level, but as I said, this is probably due to headwinds from the coronavirus and flows into the dollar. Also, the euro zone did miss its estimates for the PMI data that was released earlier this morning as well. So that's another contributing factor as to why the euro is not doing too well against the dollar. So I think I'll leave it there. That's just a quick view of how the markets are reacting. So there you have it, guys. That is a quick look at the charts, and as I said, the pound euro is holding up pretty well. Pound dollar not so well, euro dollar not so well, but that is probably other factors to do with that as opposed to the PMI numbers. I should also note that the eurozone had PMI numbers which came out this morning. They actually missed their estimates, apart from manufacturing, which beat estimates. So that is possibly why the euro is not doing too well this morning. Also, the key thing now to look at will be next week's MPC meeting next Thursday, and to see, you know, if they do actually cut rates or not. As I said, it's looking a lot less likely, and we're fairly optimistic that the strength in the pound continues short to medium term. So we'll have to see how that plays out. Just as a side note, if anyone did miss my technical analysis from earlier in the week, I will post a link down in the post for you to have a look at that. I think I'll leave it there for this morning, guys. Have a wonderful weekend, and I will catch up with you next week.